Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for March 19th, 2019. We're talking level planning in the monsters of tech, which is Facebook, Apple, Amazon, Netflix, Google, because we're seeing movement, especially in Google with a breakout, and Amazon, which has been a tightly compressed, low ADX, range contracted stock that is breaking away from the 1600 level, above 1700 into 1800s. For Facebook, we do have our resistance pivot just shy of 175 per share. This was a pro-trending stock that turned downtrend for the bulk of 2018's final months and has turned to the upside up away from 122 per share. And that's again taken us just shy of this 180 level. We do have a double top at the moment and some down sessions, 3-4 down days in Facebook shares that happen on higher volume. And of course, as we always like to see, a spike up in implied volatility. That's taken Facebook's percentile rank to 32% and IV percentile just under 40%. With a low ADX and the ATR, or average true range, is rising. The probability for the future does take it to session highs or prior highs, 175, or down beneath to about 145. These are key pivots to watch in Facebook. For the moment, we will be watching or trading on a very short term intraday or swing position with in-out spreads or shares on the departure, which is a move away from 160 per share. If the range continues, if this new up phase continues, that could put bullish pressure on the stock and take it back to the session highs or prior highs from the prior swing in March. That's again just shy of 175 per share. That's your bounce thesis. However, watch this stock on the 50-day moving average. That is the line in the sand. And any further or future downside action under 160 per share does open a liquidation swing. That would be an open air pocket of stop losses and liquidation, sell orders, sell short, buy puts, in-out spreads, etc. that could push the share prices lower to at least 150, maybe even back to this 145 pivot. That's our focal points for the future of Facebook. We're of course watching the equity markets and how they interact with their key resistance points in today's selling session. It was a key reversal day in most of the equity products, Facebook notwithstanding, but it was weak when the market was strong. So certainly keep a watch on this and any downside pressure that may trigger or extend beneath 160. Next would be Amazon. And we've been watching this stock because it has been a low ADX candidate. It's still a low ADX candidate, but you can see it picking up. That's exactly what's supposed to happen. A low ADX situation indicates compression or sideways action, and the future is a breakout or range expansion. The question is, will Amazon go beyond 1800 per share? That's what we'll be watching in the future, or trading any movement above it to keep this range expansion in play, or a double top or resistance play against it. That goes with Facebook, strangely, into support. Amazon is up into resistance. Bullish volume dominates Amazon shares because we see the bullish volume spiking earlier on this swing up and of course in the last few sessions. So Amazon could be a bull breakout candidate if the share price gets higher than 1800. Otherwise, we will probably see another just simple pullback, simple retracement as we saw earlier to keep this wider range in motion. And again, the IV percentile is about 25. The rank is 25%, and the percentile itself is 20. These are just volatility measures, ATR, implied volatility, and the ADX is a compression when it's low or trend when it's high indicator. Next up, we'll add an extra A for Apple. We have been seeing this range breakout. Apple did fall from its resistance pivot to the 50-day moving average. And if we look at what Facebook could do, this is the support bounce outcome. Remember, Facebook has fallen a few sessions down to the 50 exponential and could bounce to the prior high or extend. That's what Apple did. Now again, Apple is into this 190 per share level. We are seeing implied volatility tick to the upside, and of course that ADX remains above 30. That indicates that a trend is in motion. However, the trend is weakening because the volatility is weakening. The average true range is weakening. So keep that in mind, of course, as we interact with 190 per share. That's just beneath this 195 pivot and the 200 per share rounding, but there's not a whole lot there. So we're watching these levels closely. Next up would be Netflix. Netflix is the smallest market cap of these big tech names, but we're still watching it in terms of trades or opportunities. Today was a down day in Netflix, and that's generally speaking expected. It is into resistance at this 360 per share level. A divergence is, of course, trending ADX, low average true range, pickup or increase in implied volatility. That's going to extend this probability of expiring cone, which means volatility for the future could see the share prices either way up here or back to the lower pivot. That would be about 300 per share. I think the downside might have a better chance at playing out than the upside, but as traders, we have to be prepared for surprise or alternate thesis outcomes. Netflix shares do have divergences, increase in implied volatility, and of course decrease in daily range. Those are hallmarks of compression that could lead to a future breakout. If volume and momentum are any type of indicator for the future, that could be the downside. And we'll finish up our FANG stocks, or the monsters of tech, with Google. Now, Google is an interesting play given that it did range expand or break through or hold support really off of 1100 and trended all the way, today's session especially, to 1200. So Google is in an uptrend short term with stronger momentum, and we can see volume to an extent picking up to the upside. So watch Google into 1200 per share. Implied volatility has been lower. That makes sense because the market share prices has been up and the ADX is slightly rising. But there we go again with our average true range hitting about 20 per share, roughly 19.6. That means in one session, we can expect the price of Google to go up or down $20 on average. And that's lower than it has been during the sell-off. So watch all these stocks. We'll go back to our bigger picture, look at the monsters of tech with Facebook into support, possibly playing up into resistance, Netflix into resistance, possibly playing down away from it, Amazon breaking out but into the 1800 per share target, and Google breaking to the upside with Amazon at 1200 per share. So both of these could come to the downside. With all these stocks into resistance or key inflection points, the one outlier is Facebook. It's already came down from resistance. Any further movement under 160 could open it up to play to lower levels. But as always, watch these levels, open positions, any premium sold or premium bought, and play toward or away from these targets on intraday or short-term swing trades. As always, be safe, be careful. This is Corey Rosenblum with your Theo Nightly video for March 19th, 2019.